Everyone wants to understand how to forecast markets and how to make quick money fast because, well, it seems rather obvious if you will understand what will Bitcoin going to do in next 3 to 6 months or what's going to happen with stock market indices, major commodities, or some forex pairs. Well, you could simply bet your money on that particular market movement and you could multiply your capital in one or two trades. Sounds easy, right? And here's the thing, nothing like that works in practice at all. Trading is not about forecasting markets, and trading certainly is not about ability to say how right you are or how smart you are listening behind camera, something like me. But actually, trading is something else entirely. Trading is approach and method which is governed by strict rules and principles. And if you don't know them, you are probably along with thousands of other traders who are constantly losing their money. But if you understand core principles and if you have even enough sense and some self discipline to follow these principles, you're all set because actually these principles are not that complicated and tough to learn, but they are simply governed by logical sense and I would say rational mind and a little bit of self discipline and I would say self preservation. If you know that, well, opportunities are endless. But now, let's now start and address these fundamental issues and I would say core trading principles. Of course, there are not like five golden rules and they are not, I would say, aligned in their importance because one might say that there are rather different important trading principles and they are not canceling one each other out. But in this video, I will simply guide you about general understanding of markets and trading. So let's start with this rather long introduction. So first things first, remember, if you are trading correctly, you don't care which markets to trade because general trading principles apply to all markets and all market conditions. So if you wanted to trade oil in 70s, tech stocks in 90s or crypto today, you probably will be using principles which are almost the same. Application changes because technical tools change and flow of information and ability to execute orders that changes across the years, but principles no. So understand that you're not trading just Bitcoin or just euro against dollar currency pairs. You're learning to trade, and if you know how to trade, that applies to all markets and all market conditions. Of course, there are nuances for each market, but that doesn't change the picture. So understand, trading is trading. This is not like stock trading, forex trading, commodity trading, or crypto trading, unless we are talking like special situations with certain financial products and like arbitrage opportunities or spread trading and stuff like that. But if we are talking about general trading, all principles are the same. And we have to start with the first one, and this is risk management. Traders think of perspective of how they are preserving capital for next trade and how they are risking by knowing that they might have 10 or 15 trades losing strike at next trade. Not by the fact that they will have huge winner as their next trade, but what might happen if their 5 to 10 trades will be losers. This is the way professionals look at the market, and this is the way you should look to trading. So first things first, this is perspective of risk management and capital preservation. And that is the thing that separates winners from losers. So if you are taking, I don't know, any kind of market, so for instance, now we have a Bitcoin, we might see that people are making huge money in this move or in this move. So in like late 2023 and early 2024, somewhere here we had huge move and then now we have huge move in November 2024. So here we made huge move, but I seriously doubt that someone made money here because if they traded daily time frames as we have now, they probably have been losing money to countless of unprofitable trades. So here we are making money, here we are preserving capital. And you are saying that those flat market moves are more frequent from than market trends. Yes, of course, we could narrow this down to shorter time frames and trade in these markets as well, but nevertheless, you get the point. You make money usually in this leg, and then you are preserving capital. So understand that. And this goes to second conclusion. There has to be certain conditions for your trades to operate. This was trend approach and this was range approach. So in most cases, one strategy will work for these market conditions, and there will be strategies that will work for range market conditions. So understand in which markets your strategy is working and make you sure your first rule, risk management, applies to both of these approaches. So first things first, risk management is key because you don't know whether you will have choppy market or huge market spike. And then understand that markets will be most of the time ranging and you have to wait for your opportunities. And third, I would say, is also obvious. Golden rule of trading: cut your losses and let your profits run. So this is the principle which is, I would say, foundations of trading, and it simply means that you have to balance your losses and maximize your gains. That goes to previous 2 points, and that means you are preserving losses, you are cutting your losing positions immediately, and make sure that your absolute drawdowns are manageable. Well, this is different for each person. Someone has low risk tolerance, so they might allow for themselves to trade with no more than 10% drawdowns. And there are higher risk takers for whom 40% drawdowns might be acceptable. But the point always is the same: preserve your capital and manage your losses. And then when you have opportunity, then you have to make far more money here than you have been losing here. So that means in practice, you might have 5 to 6 losing trades here, where you are losing like 5 to 10% of your capital. Then you have huge gain, you have open-ended profit positions, and you are making 20% in this move. So that means you might have even one trade out of 5 which is profitable, but still that one trade is more profitable than all previous losses combined. So this is cutting your losses and letting your profits run in practice. But of course, most of the traders are doing this completely in opposite direction. So they have small profits and large losses, and that's why they lose money. But yes, this is important point. But now let's go further. And the fourth is rather subjective, but it's extremely important because this means you have to find strategy that fits your ideas of markets and regime and your own personality. So that means you might have position which holds trades for years, and you might have trading strategy which holds positions for hours. And that doesn't mean one is better than other, but simply one works for one person and other works for another person. For instance, if you are trading daily Bitcoin chart, you probably could hold your trading positions in bull and bear markets for extended time periods. For instance, you might go short at April 2002 and hold it almost a year, and then you might go long at October 2023 and hold this position up until July, and then went long again in next couple of months where we have this spike. But if we would trade similar approach in 1 hour chart, we probably, this is simply for illustration, and then we probably could choose even lower moving average, and probably we will hold positions only for maximum couple of weeks. And if we would trade intraday charts, we will hold our positions for 30 minutes or less. And that means understand which works for you and do not conflict these strategies. If you are short-term trader, look at short-term approaches, and if you're a long-term trader, look at long-term approaches. Of course, previous 3 points stand here as well, but do not look for signals and trade entries which are meant for a couple of hours if you could only afford to have a long-term trading strategy because you are too busy. And if you are a long-term trader, do not be over concerned about market volatility in 1 or 2 days because it will disrupt your long-term approach. So it's extremely to understand these points. But nevertheless, I hope this video gave you an idea how you have to look at the markets and what are universal trading principles, because you could look at this video like, I don't know, 50 years from now on, and these approaches will still stand. Of course, you will see different screen, different markets and different prices, but approach will work. So if you want to understand how to apply actually this in practice and to use that to make real tradable strategy which is best for you, join my trading program and use my free copy trading signals, because that works and it will set you on the trading level and trading principles which actually work and has verified proof with good profitable trading strategies. So join me and let's meet at our next video.